I've opened up the VantagePoint software. I got a lot of different stocks, some currencies, and some things that I want to go over with you. But it's very important that you understand. Okay, what are these tools doing? How does this work? Let me go ahead. I want to show you under the hood of the software here. Now, I have this chart up here for Acadia Pharmaceuticals. I'm watching this for several weeks now here, but we're going to go ahead and open up this chart here, and I want to show you something extremely interesting. And this is just the really great stuff here. Now, we can go ahead and open up Acadia Pharmaceuticals, open up the properties, and I'm clicking on Intermarkets here. And what this is these are the 25 to 30 most, importantly, this is what that patent has identified. So scanning all of that market data, it's able to identify where are these important market correlations, where should we be focusing this intermarket analysis. And so you see here that there's a wide basket of markets here, but this is very important. We've got the biotechnology ETF. Think about when you want to go trade the biotech stocks. Well, what is the ETF group doing? That can give you a significant edge in knowing where the future market direction is. You got the Qs, the Japanese yen, crude oil, the dollar index, natural gas. You've got indices, interest rates, all this stuff extremely important for your trading, but also some of these relationships a lot more subtle that an individual simply would not have the ability to analyze these sort of market relationships or even know that there's that correlation there. I mean, we're talking about different technology stocks, healthcare stocks, financial stocks, but very important information. So remember, those two patents, that's what this is. It's identifying those important market relationships, but then weighing how each one of these markets affecting the one market that you need to trade. And so, a lot of traders out there using, traditional technical indicators and traditional technical analysis. I mean, think of how simplistic that is compared to this. When you're just taking some past prices, we'll look some averages, some standard deviation, and you think that's giving you an edge in the markets, but these things break down very, very rapidly and just aren't consistent over the long term with changing market conditions. So 25 years of experience refining this tool definitely goes far and beyond what a lot of people are doing out there with technical analysis. So the other thing, guys, is regardless of the markets you trade, we take in so much market data here. We forecast for over 70 futures markets. So if you're trading the E-mini S&Ps, if you're trading crude oil, meats, metals, we talk to farmers all the time. We use the software to hedge their soybean risk. I got farmers up in Minnesota and things like that. The Forex, over 30 currency pairs, major pairs and cross pairs. This is so important for guys who trade Forex because last week I'd gone short a British pound Australian dollar, right? Well, think about the analysis that needs to be done there. That trade is not just about the British pound. It's not just about the US dollar. It's about the Australian dollar. It's about the Australian indices. All of these things need to be taken into account so that you can make a good trading decision when you need to go in there and risk your capital, that you've got something that's going to keep you on the right side of the market. But all these different stocks, we've got 12 different stock sectors. But here we're going to go ahead and look at a healthcare stock, and each one of these has all the individual stocks within each sector. So those open up there. But let me go ahead and we're going to talk about this chart here. So does everybody see the blue and the black line on the chart here? We'll go ahead and get started. This is very, very important here because I want to really make sure that you guys understand these concepts as we move forward. Now, we have the price data of Acadia Pharmaceuticals here, our candlesticks here. Now, these are all daily bars and candles. The software works off of end-of-day data. It needs to wait for all those markets to close, crunch all of that data, weigh those intermarket relationships, and then forecast forward where the market is expected to go. So these are all daily bars and candles. And against those candles, we have a black line and a blue line. Now, the black line is a simple moving average. It's a regular technical indicator. It's only based on past close prices. So it's always going to lag behind the market, and it's simply going to react to essentially where the market's going and where it's, where it's moving. So if the market moves up, it's going to follow that up and just average in the last close price and throw off the one from 10 or 12 days ago, however long that is. Now, the blue line on your screen, though, VantagePoint's proprietary predicted moving average, and this is key. Now, how that line is plotted, and I really like to think of this as, it's a predicted moving average. It's predicting where average prices are expected to go. But how it plots that line is it's not only looking at the past prices of Acadia Pharmaceuticals, but it's weighing all of those relationships, weighing those leads, weighing those lags, those inverse correlations. It's weighing all of that information and producing an output and plotting that output for you. So whenever you have an instance where the predicted moving average, the blue line, has crossed above or below the regular simple moving average, that lagging indicator, it's signaling that there is a trend change in the market. So what that tool is going to allow you to do is get into markets much sooner. That's the benefit of this type of analysis, is that it's going to give you much more consistent forecasts so that you can get into markets early, get into that trade so you can catch the best part of the move. So as long as that blue line remains above the black line, it's still forecasting average prices to move higher. If average prices are moved higher, just hold on to your position. If you're a swing trader, it makes perfect sense. If you know the direction and know what to expect, then go ahead and remain in the trade. So we see over this time period from crossover to crossover, just with these indicators, we're going to get to this neural index. I want to explain this to you as well. But as long as you trade in line, and use that to identify direction, it's going to go a long way in helping you make much better trading decisions. So we see here in Acadia over 24 trading days. So from when they said the market's going up to when it said it's going down, you've got a 63% move in the stock. So, I mean, imagine, guys, how many shares of a $21 stock could you guys buy? They've got all different traders of all different sizes and experience, but, let me know, how much stock of a $20 stock would you be willing to buy based on the strategies that you use? Well, $13 per share is a significant amount of money for almost anyone. If you're trading a few hundred shares, you're making a significant amount of money, and certainly if you're trading thousands of shares, doing quite well there over a short period of time. But options, you trade options, well, what would have happened if you took a call option right about here, set it out for a couple months out in expiration, and as long as that blue line stayed above the black line, you went ahead and sold it. So it doesn't really matter if you trade options. What matters is that you're making decisions in a consistent way to go ahead and help you, be more consistent with that decision making. But moving forward here, I mean, blue line crosses below the black line. Well, what do we see? Market moves lower. And a pretty hefty decline over this time period as well. Certainly don't want to be long markets when the direction's down and it's moving down about 12% of the time. So imagine, yeah, you bought those options back here, they'd moved up in value, and you go ahead and essentially buy a put option to go ahead and trade that spread there. Or, yeah, I mean, you can go ahead and mitigate all your risk in the trade, and then if volatility picks up, you're going to make a ton of money. But certainly when you got this next forecast of the crossover to the upside, maybe go and let go of those put options and look to get more heavier long. So a 41% in 17 trading days, again, guys, how many shares of a $29, $30 stock could you buy? I imagine you could get a pretty sizable position there, but what's so important is that you get that timing right so that you can make that position even larger and actually, see some benefit there. Now, that is the predicted moving average, guys. That's always every single day going to plot forward. Are average prices, are they expected to be higher than the regular moving average? That's informing you of your direction. Now, at the bottom half of the screen here, this is what's called the predicted neural index. You see P index right here, and this is what's really great, guys. What we want to do is combine these two indicators to help us get confirmation and then know what to expect as the market trades forward. That's a huge thing in trading. When you know what the expectations should be, or you know what to expect, it gives you a lot more confidence to hold your trade during times of market volatility, where a lot of people get a little anxious. The market pulls off of its essentially, peak profitable position, starts moving lower, and you see all those unrealized gains getting taken away. Well, sometimes you have to wade through that volatility to get the real fruit out of the trade. So how this indicator works is it's forecasting forward 2 trading days. So it's a very short-term indicator, but we can use it in combination with the predicted moving averages to get even more, just a more complete forecast to help us understand how this market will trade. So whenever you see that crossover happening, as long as that neural index is solidly up at a 1, that's a good opportunity, guys. That's saying, look, over the direction has changed, and over the short term, you have an extremely high level of accuracy that this market is going to move higher over the next couple of trading days. But guys, how I like to think of this indicator is it's so accurate in that 2-day window when you need to be saying, hey, over this next couple of days, do I want to be a buyer? Do I want to be a seller? What do I want to be doing here over the next couple of days in the market? But how I like to use this thing is as a throttle. When that neural index, when you've got the direction in mind, and then over the short term as well, saying, look, over the next couple of days, very high probability the market's going up, I want to have a heavier position at those times. That's just me. Some guys are day traders. They trade right off the software. I'll show you a couple techniques for doing that as well. But you see here that, the blue line is still above the black line. There's actually quite a bit of separation here, but the neural index has gone down to a 0. And you see that we do get that push lower. The market, these types of moves are hard for most traders to hold on to, because they simply look, oh my God, the market's moved down 17% in 2 trading days. I thought I was right, but I've given up a lot of gains. Let me just go ahead and get out of this thing. This is where a lot of traders get really messed up and take losses where they should be getting massive gains. But when you have these tools, you understand, look, direction is still up. We may get some short-term weakness with this neural index, but you want to go ahead and remain in the trade. The direction is still up. And you see this neural index comes up, and over this time period, strong rally in the market when all of these conditions are met at the same time. 27% in about 6 trading days over that time period as well. But look at this, we've got this period of time over here where blue line's still above the black line, but neural index getting weak. Once we get that cross, this is about as obvious as it gets, guys. Cross over the downside, neural index down at a 0, saying, look, over the next couple days, short the market. Don't be long. This thing's going lower. And then you see again, cross over the upside, neural index up at a 1, saying, now it's time to go ahead and get long. And markets have not been doing much over the past few days, but this doing quite well over the past few days. But you had to get in back here to catch that sort of move. So, realistically, I ran my scans and things like that. I'm actually going to show you, how you guys can scan for these opportunities. But right now in the markets, you should be trailing stops and riding these trends out, much like here in Acadia Pharmaceuticals. So now, sticking with this concept, though, of intermarket analysis and how you guys can start immediately using this sort of approach, if you're trading in the markets, is utilizing these markets to help confirm your decision making. So I have another chart here opened up for the biotechnology ETF here. And this is very important. If you trade, individual shares, if you trade in the ETF markets, you're going to want to incorporate those ETF markets with how you're doing your analysis of your stocks, because they can really help you understand, where you want to be paying your attention, where you want to be deploying your capital. Recently, this has been in the pharmaceuticals. This here in Acadia, Horizon Pharmaceuticals is going nuts. A lot of these companies doing quite well in a somewhat sort of stagnant market in a lot of other sectors. But what I want to show you here is that look at the effectiveness of these tools here. We have the iShares, the NASDAQ, Biotech. Well, going off of our analysis of how we look at these markets, and remember that there's a whole separate set, another 20 or 30 markets that are analyzing the biotechnology ETF, so to forecast for that market specifically, and then a separate set for each individual stock. So Acadia Pharmaceuticals has its own unique set of intermarkets to make these determinations. But we see here that, look, we get this crossover to the upside with the neural index up at a 1, pretty close to the same time that we're seeing this in Acadia. But look how this moves forward. Look how accurate this forecast is. Even with prices declining over 4 trading days, I'm getting pretty bearish here, 6% pushback in the ETF. Look at this blue line. Remains above the black line. So that predicted moving average saying, nope, direction's still higher. The prediction is higher than the actual moving average, but in the short term, that 2-day window, still some weakness. But direction is indisputably up. The blue line is actually getting more and more separated from the black line as prices, are actually moving lower, saying, look, the direction is up. You do not want to be short. Now you have the not only the crossover still remaining, but neural index up at a 1. So weighing all of those relationships and saying, look, this is where you want to be in the market over the next couple of days, off of this neural index, and this can really help you understand what you should be doing in those individual pharmaceutical shares that you're trading. So this can be extremely helpful to the upside, but then you see, look to the downside here. When we get this move lower, the similar move that we saw in Acadia, look at this neural index getting very weak, cross over the downside here saying, look, step aside from these markets, and you see things got pretty nasty here over a few trading days. Don't want to be sitting around for that. And then exact same thing the upside is, use these confirming markets in the ETFs to help you more effectively identify opportunities in the individual share market. So this works, here in the biotech ETF is what we're looking at over the past few weeks. This is a little bit more recent, the semiconductor ETF. Now, same thing, this approach. Blue line remains below the black line here. Wasn't quite ready, but you get a crossover here saying, look, blue line over black line, neural index up at a 1. Look how strong this neural index has been over this entire time period here. And we can go up and look at things like Taiwan Semiconductor. So what I do is I go over here and I type in semiconductor or whatever my ETF is and find all those individual stocks of the sector and really kind of sniper shot an individual market that's showing the strongest forecast from the software. And that's what allows you to essentially weigh all those intermarket relationships, be very selective, and be focusing your attention on where the probabilities are for you to catch that move. So oftentimes in trades just like this, I'll show you trades that I'm currently in right now, but you get into these markets, trail your stops, trade in line with the software, but you can ride these trends, trail your stops up with the market, and set these as regardless of what happens, you're going to be making some money on these sorts of trends. Cypress Semiconductor here actually, let me see how big this move is so far. We got all these markets still trading up today, but 12.5%, so about $3 a share on a $23 stock and about 13 trading days. Cypress Semiconductor, same thing. Getting these crossovers over this time period saying, look at the semiconductors. Pay attention to the semiconductors. Well, how are we going to have good timing when we need to go trade? We wait for our crossovers, neural index up at a 1. That's when we want to go ahead and be looking to get into the market. And you see up 15%. Going to be pretty difficult to lose some money here at this point, though. You see we're getting some short-term weakness from the neural index, but direction still up and already a really profitable trade thus far. But every trader is trading different markets. I usually like to include a couple of things that I'm trading as well, but I like to show this because this will help you. This really takes things to another level here as far as I showed you the direction or the predicted moving averages, that highly accurate neural index over the next couple of days. But here's a couple of trades that I'm in, but here's the methodology that we're using here is cross over the downside here in Century Aluminum, neural index strongly at a 0, but on top of all that, on top of the extremely accurate directional and short-term forecast, VantagePoint provides a predicted high and predicted low for each trading day. So when you need to decide, hey, where should I be looking for prices to move intraday, you're going to know those levels. Now think about this. How many day traders sit in front of the charts all day waiting to see some signal on a 15-minute chart? Well, you don't need to trade like that. You can trade with more consistent tools, trade over these longer time frames. You're going to know exactly where you should expect the market to trade. You can have your orders in ready to go. So I'm going to go ahead and I'll hit the predicted high and low. You can see how accurate these have been over this time period. But if you look at the right-hand side of your chart here, these are the predictions essentially. So every day you're going to have that range plotted forward for you to help you make trading decisions. So we see here in Century Aluminum, this was a great opportunity. The blue line and cross below the black line, and you're looking to take shorts up near these predicted highs. So you take a short up near $8 a share, and until the crossover comes up, you've caught about $1 a share on an $8 stock. $1.42, 17% to the downside. Great way to hedge any of your long positions that you may have in a portfolio. That worked really great for me. I love that. Now, also, in Jabil, same thing though, guys. I mean, so many traders out there are really overcomplicating their approach. They're using, 5 or 6 different indicators. This is what a lot of, very experienced professional traders refer to as redundant indicators. They're using a lot of redundant indicators that do the same thing, and they're not consistent. So when the market conditions change, they really have no way of making sure that they're still consistent in their approach. But same approach here, blue line over black line. Neural index up at a 1, saying, look to buy the market, or where do you want to buy? At the predicted low levels that are provided for you. Well, look, 2 days after these crossovers come through, it doesn't get much better than that. So we see that, look, blue line still over black line, some short-term weakness forecasted from the neural index, but pretty hard to lose some money here. 15 trading days, market's already up 11%, about 12%. So, $2 a share on a $17 stock. How many shares of a $17 stock could you afford to buy? Even 1,000 shares, you're already up a couple $1,000s in a couple weeks. So one last thing, and I'm going to show you after this, do you guys think that you could do this? Could each evening you open up the software, look for these crossovers of the blue line crossing below the black line, getting that confirmation from the neural index. Let me know, guys. Type in yes or no. Does this look like something that you could handle? That each evening that you could look for these types of crossovers, utilize this analysis? Let me know. Type yes or no into that box. And what I'm going to show you, though, guys, is you understand how to interpret the forecast, right? We've gone over that. Everyone sees, okay, I get what you're saying, how to interpret these. But, you know, there's so many different opportunities in the market. So what we've gone ahead and included is a scanning feature that's going to allow you to have these crossovers, these opportunities, when these trend changes happen, presented to you so that you're ready and you're not spending hours and hours doing a market analysis to not even see the results that you'd like to see. So me personally, I trade all markets. I trade futures, Forex, I trade the stocks. I spend maybe 40 minutes total, and that's because I spend about 10 minutes in the evening. I go ahead and, you know, there's not as many futures and Forex markets. The scans present me with exactly what I want to see after, you know, once the downloads come through at about 6 o'clock. You know exactly what your trading decisions are for the next day. And then in the morning, I get up early in the morning, I make my coffee, I sit down, I do the exact same thing, scanning more markets in the stocks, and I put in my orders for my stock trades. But I'm not sitting there all day, you know, trying to take day trades on the market. I know what levels are appropriate for me to take action on, and so you have a complete game plan ready for you before the trading day has even started. And that's what's going to differentiate you from a lot of these guys who are going in willy-nilly in the market. You know, you got to ask yourself, where is my probabilistic forecasting? What tools am I using to make my trading decisions, and are they robust? Are they consistent, and why are they robust? Why should they be consistent? When you start asking those questions, you start looking towards a software like this because it's analyzing the markets as the markets actually function today. Now, here's Aussie US. I'd actually gone long Australian dollar last week, but short British pound loss longer. But it's based off of these forecasts. Very, very simple here. We had a huge move lower in Australian US. And again, I want to show you these predicted highs and lows because this stuff is phenomenal. You get the crossover here saying, look to short the market up here at 77. And until that blue line comes across the black line telling you the market, you know, the trend is over, stay in that trade. I know a lot of traders who trade Forex. Not too many of them are catching, you know, moves like this regularly. 530 pips on a standard lot, $7,000. And, you know, when you get these crossovers, it's representing a new opportunity. Well, what do we have here? Crossover the upside, neural index up at a 1, and away we go to the upside. Already a great opportunity to the upside, 235 pips already. So it doesn't matter what markets you're trading, but what matters is, you know, you're utilizing a technology that's really been refined over all sorts of market conditions because of how it's analyzing the data. It's looking at the Australian dollar, the British pound, it's looking at the indices, it's looking at the US dollar, which you're trading every time you step in these Forex markets. It's looking at crude oil, has a huge effect on the Canadian dollar. It's looking at the indices, affects the yen in a huge degree. So, guys, I almost feel bad for traders who are still using traditional technical analysis because this is the evolution, this is the next step, but traders are still doing single market analysis, focused on the right things, and using tools that just aren't robust to keep them competitive. So what I want to show you now, guys, is how quickly you guys are going to be able to do this every single evening and find these opportunities. Now, I'm going to go ahead and open up, I have these different sectors here split up. Now, you can set up portfolios however you want. So I know some people trade options, so they want to have very liquid options markets. So you can include all of those into a certain portfolio, scan through them each evening, and know exactly you know, where you want to deploy your capital, where you want to focus your attention for the trading day. Now, like I said, you're not going to have to find, you know, flip through chart after chart after chart looking for these sorts of opportunities where the blue line crosses above the black line. What's going to happen is each evening you're going to very quickly be able to scan through these features. So I'm going to go ahead and click Portfolio here and hit IntelliScan. And this is what helps us drill down on all this information, but we can save all of this. So literally, however, you know, whatever your trading style, however you like to use the tools from VantagePoint for that, you know, if you want to trade shorter term, push more heavily on the predicted highs and lows in the neural index, you can fine-tune those tunes or those tools, scan through and have those presented to you. If you trade, the swing trades or longer term position trades, you can look for these fresh crossovers, get your confirmation, but you want to make sure that, everything is confirmed, that you're seeing exactly what you want to see. So we've got quite a few markets here, but I want to show you exactly how, quickly this works. So to cross days ago, we want to set that to a 1 because we want to find fresh opportunities where that crossover has just occurred, like we showed in those examples. Our neural index, we want that, well, we want the medium-term cross. Let's go ahead and set this to up because we want to go ahead and look for opportunities to the upside. And then neural index, we want that up at a 1 as well. So you can see that you're going to find opportunities here, but it's going to drill down on all this so quickly for you. Now, I've done all these scans tonight, and honestly, when you have all the different sectors and you scan for these things, what's going to happen is you're going to see when all the opportunity comes through at the same time. So you get a lot of crossovers in a certain sector. It says, something's going on here. Let me go find an individual stock for me to go ahead and trade. And you can focus your attention on where it matters. But I'll be honest, in the last few days, not a lot of great opportunities coming through the software because all of these really nice trends in the sectors, like the technology, the semiconductors, that all came through. The pharmaceuticals came through a few weeks ago. So that's what's going to help you, though, really instantly have these things presented to you. So I can go ahead and come over to the portfolios. We can go ahead and rename it. We can put services, long. We can right-click and save. But literally, of 169 markets that were scanned, it drilled down on 6 of these almost instantly for us. So that's what's going to save all of that time and present you immediately with, here's the opportunity you want to be paying attention to. Here's where you should focus your attention and trade in line with the software. So every day that software moves forward, indicating what should your trading decisions be over that trend, get that direction right, but then also over the short term. Like I said, using it as a throttle when you want to push those positions and when you want to scale back and be a little defensive. Extremely effective way to go about it.